it, you had to use your feet. And the Jetsons got into this high-tech gizmo and zooped around the world with that little guy there, the dog. And I asked myself, is that the future that I've gotten into now? How many of these gadgets that we saw at the time are playing out where we are today? Now, the Jetson had a housemaid who was called Rosie. She was a cartoon at the time. Her job was to clean. But if you've been looking at developments in IT right now and artificial intelligence, Sophie is there. And she's just been made a citizen. That's who you're competing with. She's answering questions. She's met Will Smith. I haven't met Will Smith. Okay? She's a citizen. So when we're having the conversation of artificial intelligence, the question I have for you is it technology leading us, or are we part of this conversation? Do we have a role as investment professionals in this conversation, or are we just letting it happen? More importantly, what is that role for us? Okay? Banks are changing. Credit processes are changing. You have whole departments moving out. Insurance. People can apply for their insurance now by just taking a picture of your car and filling your claim form. Where will those jobs go? As technology happens and these disruptions happen, your question is, what is your role? More importantly, for those who are analysts, how are you modeling this future? Or are you just assuming disruption won't happen? Debt is your next part of the agenda. This is my conversation with you. We have 3 topics or 4 topics, and I'll just highlight them. When we talk about debt, is there anything like good debt? Is my question. You will have a panel talking about this. But more importantly, when I think about debt, and I'm going to step away from sovereign debt and ask the question as a person, when is debt too much for me? At what point as an analyst do you draw the line and say, this is too much? Or can I actually grow my capital? Can I grow my wealth without debt? In question then becomes, is there good debt? As a government, is there a point when debt is enough? Is there a point when debt stops being good? Is there a point when we should stop borrowing? That's a question that I'm asking today. Stepping to the next topic is the infrastructure. Yes, the numbers that are thrown out are quite big. When you talk to anyone who is a foreigner, and it would be interesting to hear from George, when they look at East Africa, they see opportunity. When we as East Africans look at ourselves, we don't see this. The Ministry of Industry has talked about 55 billion going into infrastructure in Kenya alone, and this is in US dollars. If you look across the region, if I look at Uganda, if I look at Rwanda, there's stories of roads, there's oil, there's energy. As we are having that conversation, my challenge to you as an investment professional is, what is your role? How can you take a part? How do you play in this space? If you looked at the papers a few days ago, there was a story about shortage of hostels in Nairobi, and that the public universities are in debt. And my question just became, if I asked in here today, how many of you can put a transaction together to raise that debt? No one? Really? You have CMA here. By a show of hands, would you be willing to raise debt to fund public universities? Do you know how to put it together? That is my challenge. Where are you playing your space in this infrastructure conversation? It is not enough for us to be saying to Paul that we need capital markets to do something. We have a role to step up as well. And finally, personal branding. When I stand here, I am Patricia. I'm PK for some of you, but more importantly, I'm a daughter, a sister, I'm a friend, I'm an auntie. All these things define me in some way. My question is, what defines you? And more importantly, how do you step up and present yourself as a charter holder? How do you present yourself as an investment professional? How do you stand out? How do you get seen? How do you make a difference? So today, my invitation to you is to please join us in this conversation, and let's shape our future. Thank you very much. Without further ado, and thanks for your patience, I'll invite my friend, Mr. Paul Muthaura, who is also our key sponsor for today. Thanks, Paul.
Thank you very much, Patricia, for those opening words. And you know, when I arrived, we were both sitting in the back in a corner, tightening up our speeches, and I think she's done a much greater job than I have, so I hope you won't be too disappointed. Hope I may not be as challenging as her. Presentation of a 10-year capital markets master plan. That's really looking at how we're going to position Kenya as we aspire to be the heart of capital markets financing on the continent. But in setting such an ambitious goal, we remain conscious that we need to understand how we can leverage evolving opportunities to address transparency, to support liquidity, and ultimately to ensure fundamental impact of the markets on the economic environment. Now, when you look at the history Kenya has had, and our branding as the Silicon Savannah, that was built very much on the back of the M-Pesa and mobile money revolution. In the last 5 years alone, M-Pesa transactions have gone up by 250%. And that has unlocked a whole new spectrum. Financial
asked in here today, how many of you can put a transaction together to raise that debt? No one? Really? You have CMA here. By a show of hands, would you be willing to raise debt to fund public universities? Do you know how to put it together? That is my challenge. Where are you playing your space in this infrastructure conversation? It is not enough for us to be saying to Paul that we need capital markets to do something. We have a role to step up as well. And finally, personal branding. When I stand here, I am Patricia. I'm PK for some of you, but more importantly, I'm a daughter, a sister, I'm a friend, I'm an auntie. All these things define me in some way. My question is, what defines you? And more importantly, how do you step up and present yourself as a charter holder? How do you present yourself as an investment professional? How do you stand out? How do you get seen? How do you make a difference? So today, my invitation to you is to please join us in this conversation and let's shape our future. Thank you very much. Without further ado, and thanks for your patience, I'll invite my friend, Mr. Paul Muthaura, who is also our key sponsor for today. Thanks, Paul.
Thank you very much, Patricia, for those opening words. And, you know, when I arrived, we were both sitting in the back in a corner, tightening up our speeches, and I think she's done a much greater job than I have. So I hope you won't be too disappointed. Hope I may not be as challenging as her, but I think she's raised some very fundamental points around how do we understand our role in transforming and driving economic development. You know, as a capital markets regulator, we're very conscious that we're not a regulator for the sake of regulating. We have to regulate to create a conducive environment within which business activity can go on. And in delivering that business activity, how is that actually translating to the ultimate economic environment, both at a domestic and a regional level? That poses some very fundamental questions around appropriateness of products, how we're responding to innovation, how we're taking on disruption, and effectively embracing the potential that may come from that disruption, and how we effectively channeling all the potential funding flows in the world into the most constructive sectors of the economy. I think one of the things we're very conscious of as the authority is there is absolutely no absence of capital in the world. The fundamentals of global finance really treat capital as a very finite product that you're all competing for. But in reality, in a world of negative returns in the largest markets of the world, a very aggressive pursuit of yield and growth looking out into the world, now is much more a time of how are you best positioning yourself in terms of your ability to understand the potential opportunities, manage the risks, and address and provide a transparent and reliable return. I think as Kenya, when we debate the issues around a reliable return, I think we continue to face significant challenges when you look at double-digit government borrowing. So if government is giving you a risk-free asset at 11, 12%, then who amongst you is going to tell your client, I have a very impactful project that's going to deliver to us very strong and reliable 7% return over the next 30 years. But there's a free, it's a risk-free asset at 10. How are you going to convince them to look at infrastructure? How are you going to convince them to look at real estate? How are we going to look at the opportunities that may be coming from some of these fintech innovations when we're looking at some of the underlying fundamentals that are affecting how funding is flowing and where it may ultimately end up? As an authority, we continue to be extremely committed to understanding not only the opportunities that can come from fintech, but working towards trying to create a conducive environment for it to truly evolve to its true potential. In the context of the planning cycle, where we'll be starting a new strategic planning cycle with effect from July of this year. And one of the key tenets or key strategic objectives that we're rolling out for the new strategic plan is looking fundamentally at how we can leverage technology to drive efficiency in the capital markets value chain. Now, that's a very loaded statement. And it is born from a recognition that as a regulator, all we can do is try and address the issues around support for effective implementation, how we can introduce a level of certainty, transparency, and consistency in terms of the products that are going to become available, but still retain an appropriate level of flexibility to be able to allow a diversity of market solutions to come forward. Now, in that context, I think we're very glad to see some of the critical steps that the government of Kenya has taken in terms of the February announcement by the Ministry of ICT on the launch of distributed ledger technology and artificial intelligence task force to really understand how are these evolving technologies going to be able to have a meaningful and sustainable impact on Kenya, how we structure operations, how we build our registries, how we look at our payment systems, how we look at interregional trade. With the recent announcement of the Pan-Africa Trade Agreement, one of the continuous underlying issues with Africa trade has been the absence of infrastructure on the continent. So even where you may want to trade across the continent, are you actually able to move, be it products, services, easily within that region? But when you look at the potential that can come for the leapfrogging of legacy technologies, especially in financial systems, with the evolutions of fintech, we start really having to ask the question whether we can continue to use the absence of infrastructure as an excuse. Because there are alternative ways you can really look at channeling funding, creating opportunities, and moving assets and deploying them where they're most impactful. Now, within Kenya, we're very honored to be working with our industry on the implementation of a 10-year capital markets master plan. That's really looking at how we're going to position Kenya as we aspire to be the heart of capital markets financing on the continent. But in setting such an ambitious goal, we remain conscious that we need to understand how we can leverage evolving opportunities to address transparency, to support liquidity, and ultimately to ensure fundamental impact of the markets on the economic environment. Now, when you look at the history Kenya has had and our branding as the Silicon Savannah, that was built very much on the back of the M-Pesa and mobile money revolution. In the last 5 years alone, M-Pesa transactions have gone up by 250%. And that has unlocked a whole new spectrum of financial market and instrument access. It's transformed how we conceptualize financial inclusion in our country. But it has also simply set a foundation on which we now need to build. The journey we've walked on mobile money, ultimately you'll find is really leveraging to a certain degree the simplest level of technology to have an impact. But now we're facing the challenge of how we're going to escalate that, how we're going to make the solutions we're looking at scalable to look at much more informational growth in the financial sector in the country, as well as in the region. As an authority, we're many of you in this room, as well as both local and international partners, towards developing or designing an appropriate, what we call a regulatory sandbox strategy, so that we can create a safe space within which new financial technology can evolve to try and address capital market solutions within a controlled or limited regulatory environment, so we can truly assess their potential before, one, they're released into the wider market, but also to make sure that we're building an appropriate understanding of the nature of the risks and concerns to ensure that also our regulatory models will be able to be responsive to the new challenges that those products will be introducing. To that end, the authority has been very honored in the last 3 years to be recognized as the most innovative markets regulator on the continent. But we're also very conscious that receiving recognition like that ultimately puts very much a bullseye on your back. Because every day people walk into our office and they say, but I want, why are you not being responsive? And you try to highlight risks, you try to address some of the fundamental underlying investor protection and transparency issues, and they're saying you're not being innovative at this. So it is a challenge, but it is a challenge that we very warmly embrace to make sure that we can continuously evolve as a business, to make sure that we are creating a conducive environment for the growth of the capital markets in our country. Looking at recent studies, a report released by the East Africa Venture Capital Association, they highlighted that the fintech marketplace in East Africa is a culmination of several unique factors, including strong mobile penetration, payment data, boosted by hardwired partnerships between banks and MNOs, but challenged by infrastructure support, cautious funding, uncertainty, and lack of sector direction due to lack of regulations in the area. Now, we are trying to address the regulatory aspect, but as Patricia challenged you, it is you who are going to address the fundamental issues around uncertainty, undue caution, and driving towards clarity in what these opportunities can be. We have, when you look at the growth of our capital markets, they have grown very incrementally if you look at the nature and scope of the economic development we've seen in our country. And it is only the people in this room who really have ultimately the credibility to a degree to give the guidance, give the inputs, work with the various the investment decision makers to make sure that they're looking at issues from a much broader perspective in terms of how our ever-growing pools of pension funds in the country, our significant pools of SACCO money, insurance funds are actually going to be deployed in a meaningful manner and not just simply going into this endless cycle of government debt investment. Now, as I conclude, ladies and gentlemen, I'd really like to just take this opportunity to appreciate the partnership that we've had with the CFA Institute of East Africa. It's been fundamentally focused around building awareness and looking at empowerment. We note that just last year, we're very honored to provide one of the judges for the CFA East Africa Research Challenge, which then culminated in the International Research Challenge. And in that context, we hope we will also enjoy.
Mission is to connect the providers of capital to the users of capital. They channel savings into productive investment and help companies, investors, and individuals manage their risk. Capital markets also provide a supplementary source of funding to bank lending. And we saw this very small share of the pie currently. Let's get back to the mature markets for right now. The combined mature markets like the UK, like the US, the combined value of corporate bonds and listed companies is many times more than that of bank lending. In the UK, that number is 4 times as much. The amount of capital raised in equities is equivalent to in the UK, about 6% of GDP. So it's a very significant number. And the capital markets in the UK play a significant role also in the Eurozone economy. Of course, now we have Brexit, things are becoming a little bit more complicated, but there still is a very, very strong interdependence in the markets between UK and Europe, even though UK will no longer be part of the European Union going forward. And there have been a number of structural headwinds in the developed markets and in Europe since the financial crisis 10 years ago. We've got a push for regulatory reform, a very different regulatory environment than what Paul was talking about here. We've got Brexit that I mentioned that needs to be navigated, and there's a lot of uncertainty around Brexit in terms of what's going to happen over the next 2 to 5 years. We've got fintech, and I'm glad to see that a lot of including the next speaker, John, but a lot of today's discussion is going to revolve around technology and fintech in general, and the relevancy associated with that in the capital markets. And then international competition and international relationships. And there's all sorts of geopolitical shifts and political tweets and whatever you want that changes the world. But ultimately, I think we're going into a new world that is going to benefit regions such as here. The global markets have become increasingly complex, and I truly believe that they need to be less complicated and more transparent. They need to focus on the value and the benefits of society, and that's why I'm so I guess proud to be associated with the CFA Institute. And we'll talk a little bit more about the CFA Institute later in terms of how even in the mission statement, the final part of the mission statement is for the ultimate benefit of society. And, that is very powerful. We are a very interesting point, as I mentioned, in world history. There are a lot of key themes emerging in trade, regulation, demographics, and business relationships, and I just want to touch on a few points on each of those areas. So in terms of global trade, it's undergoing change, like I mentioned. There are regional shifts. UK voted to leave the EU. I'm watching CNN since I got here, and it's all about, it's Trump, Trump, Trump. Very forceful in promoting his Put America First agenda. And then on the other hand, Asia and China want to play a very active role in the whole globalization process. So we've got a lot of moving parts. And trade agreements like NAFTA, which I'm very familiar with because NAFTA is US, Canada, and Mexico. And when I was growing up, the biggest trading relationship in the world was Canada and the U.S. Now it's the U.S. and China, and that's how the world has changed a little bit. But the trading agreements like NAFTA are very laborious and complex for governments to negotiate and now potentially renegotiate. But most trade does take place on a regional basis, so it'll be necessary for regional trade barriers to dissolve to facilitate further economic growth. And I know Paul referred to some of the progress here in Africa in terms of bringing down the barriers to facilitate more regional trade here in Africa. In terms of regulations and practices, I think one of the trends is that individual countries are taking more control of the structure and the daily operational practices, and I think we'll talk a little bit more about that today. There is an increased, concern about the level of regulation at not just the domestic, but also at the regional and global levels. And of course, there's a lot of interrelationships between all of those. Regulators are keen to ensure that financial institutions have an effective culture of risk management, where excessive risk-taking is curtailed. And that's certainly been the focus since the financial crisis. But then again, in some cases, governments are limited with the resources, so might partner with other entities to achieve regulatory objectives. I want to touch on demographics a little bit as well. global demographics have changed, and generally the population around the world has aged. For the first time, there are more people that are aged 65 and over in this planet than children under 5, and that's a significant shift in demographics. The UN estimates that by 2050, 15% of the world population will be over 65. Now, that may not sound like a big number, but that aging population, the senior citizens, so to speak, are going to create an increased burden or undue pressure on society in terms of, most specifically, spiraling healthcare costs, pension costs, etc. These trends that I talk about are maybe more prevalent in developed economies, more Europe and North America, than emerging economies. And so that could certainly be more disadvantageous to Europe and North America, and perhaps be one of the competitive advantages here in Africa and in Asia. One segment that will benefit in the developing world is definitely the retirement industry. It's already very well developed, but the increasing need for professionals to plan, to save, and to invest for retirement is certainly an area where the CFA Institute is very involved in terms of our membership base and also our advocacy efforts. And then one last trend that I want to talk about is business relationships, in terms of ultimately clients are taking more control of their financial relationships. They're more discerning, they have more access to alternatives, and this will encourage businesses to be more focused, more competitive, improve their practices, and hopefully drive improvements and also foster a better service. Financial business models will be less one-size-fits-all and more customized, more niche in the future. So ultimately, the successful financial institutions are going to be the ones that are going to be able to adapt to these changes. And like everything, and a lot of the theme of this conference is technology will be an enabler. How much of an enabler? Well, the devil is in the detail, but certainly it is quite commonly viewed that technology is going to be the catalyst for disruption in our industry and make things happen more quickly. So let's now talk about the advantages in Africa, and maybe more specifically, because Kenya is one of the more successful areas in the region, and there are a number of advantages which are go across the region. The first one is economic growth, and I'm quite excited when I see the growth numbers around the world, and you see, X country is growing at 1%, and this country is growing at 3%. Growth is abundant in emerging markets, but especially in Africa, especially in East Africa. In terms of GDP, I'm telling you numbers that you already know, but Kenya has been growing at a rough clip of about 6% a year. It's forecast to be a little bit more this year, 6.5%. And to put that in perspective, if you look at the World Bank numbers, the global economic growth this year is expected to be about 3%. So Kenya is at a run rate of over 2 times the global run rate for growth. This will be driven by an uptick in investment, manufacturing, and trade. And like I said, the advanced economies are growing at a slower rate, closer to 2%. Emerging markets are projected more in the 4 to 5% region to succeed. If we also look at another, it's a very small, concentrated capital market intensive state. But USA 147%, China 66%, and then we have Kenya at 25%. And I would expect those numbers to grow significantly over the next decade. Let's talk a little bit about another advantage, the young population. So I think that is a real asset to the continent to have this youthful population, a population that can promote modern ideas and creativity and tackle the challenges that we have here. A growing entrepreneurial around the world, and you see, X country is growing at 1%, and this country is growing at 3%. Growth is abundant in emerging markets, but especially in Africa, especially in East Africa. In terms of GDP, I'm telling you numbers that you already know, but Kenya has been growing at a rough clip of about 6% a year. It's forecast to be a little bit more this year, 6.5%. And to put that in perspective, if you look at the World Bank numbers, the global economic growth this year is expected to be about 3%. So Kenya is at a run rate of over 2 times the global run rate for growth. This will be driven by an uptick in investment, manufacturing, and trade. And like I said, the advanced economies are growing at a slower rate, closer to 2%. Emerging markets are projected more in the 4 to 5% region. So over the next decade, many countries that were classified as emerging markets will be developed markets. If you look over the last 50 years, countries such as South Korea, Singapore have made rapid improvements and now are considered, leaders in the developed world. And I'm not going to be alive in 50 years, but I would be delighted to come back here in 50 years and see Kenya being one of the global leaders. But in order for that to happen, there's a number of things that are going to have to happen. But I think Paul alluded to a lot of things in terms of the regulatory environment and what is needed to succeed. If we get more specific to the capital markets in terms of just general GDP growth, we have the same kind of statistics that you're all very aware of. So the stock market, one of my favorite measures is the stock market capitalization relative to GDP. The global average in the last few years is about 80%. USA is 147%. Hong Kong is like 1,000%, but Hong Kong is a very different situation. It's a very small, concentrated capital market intensive state. But USA 147%, China 66%, and then we have Kenya at 25%. And I would expect those numbers to grow significantly over the next decade. And the CFA Institute is very much a proponent in fostering the trust in markets by developing codes, upholding ethics and standards, and implementing global best practices. But regulation alone can't prevent violations. As we know, we need strong ethical principles adopted by firms and by individuals. The onus is on senior management to create a strong culture of ethics at their firms. This must permeate throughout their organization. And investment professionals must realize that individual decisions can compound into major crises that can create systemic risks in capital markets. And one example is, I don't know if you're aware of the rogue trader Kweku Adeboli at UBS. That he cost what happened. Well, to cut a very long story short, he concealed a lot of trades, and he was a rogue trader, and he lost the company $2.3 billion, very close to bringing down one of the largest banks in the world. So these things can certainly snowball into serious things. So we have to realize that our individual decisions, we need to be accountable for our individual decisions. I have seen firsthand a very strong desire to improve ethical literacy, as I call it, across the board. And by ethical literacy, it's the ability to recognize the ethical choices that we face and the ethical philosophies that guide our choices. And the CFA Institute is more committed than ever to developing new products and initiatives to meet this increasing demand, whether it's training, whether it's certification, whatever it might be, this is really an area where I believe that you'll see a lot more from the CFA Institute. And then finally, education. I truly believe, like Bill Gates, that education is the key to the quality of the investment market infrastructure. Capital markets work on trust. And when trust is violated, for example, the financial crisis, the result is market instability. And the CFA Institute is very much a proponent in fostering the trust in markets by developing codes, upholding ethics and standards, and implementing global best practices. But regulation alone can't prevent violations. As we know, we need strong ethical principles adopted by firms and by individuals. The onus is on senior management to create a strong culture of ethics at their firms. This must permeate throughout their organization. And investment professionals must realize that individual decisions can compound into major crises that can create systemic risks in capital markets. And one example is, I don't know if you're aware of the rogue trader Kweku Adeboli at UBS. That he cost, what happened, well, to cut a very long story short, he concealed a lot of trades, and he was a rogue trader, and he lost the company $2.3 billion, very close to bringing down one of the largest banks in the world. So these things can certainly snowball into serious things. So we have to realize that our individual decisions, we need to be accountable for our individual decisions. I have seen firsthand a very strong desire to improve ethical literacy, as I call it, across the board. And by ethical literacy, it's the ability to recognize the ethical choices that we face and the ethical philosophies that guide our choices. And the CFA Institute is more committed than ever to developing new products and initiatives to meet this increasing demand, whether it's training, whether it's certification, whatever it might be. This is really an area where I believe that you'll see a lot more from the CFA Institute. And then finally, education. I truly believe, like Bill Gates, that education is the key to economic development. It starts with the financial basics and extends into higher education, universities, professional certifications, and lifelong learning. I mean, financial literacy is about being aware and having a basic understanding of simple financial products such as savings accounts, loans, insurance products, etc. Well-designed financial education initiatives can empower vulnerable individuals economically so that they can better manage household resources and pursue income-generating activities. One of the things that I didn't know before I came here is what is happening in higher education in Africa. It's going through such a rapid expansion phase. In 2000, I believe there were about 6 billion students enrolled in African universities. And today, that number has more than doubled. Professionals, doctors, teachers, engineers, financial analysts, whatever, are key to the vital success in the region, and higher education is the key factor in producing those professionals. But also, professional credentials like the CFA program can introduce flexible ways of learning to meet the changing needs of industry practitioners around the globe and also here in Africa. Completion of the CFA program represents a strong understanding of investment topics as well as commitment to ethics. So, in closing, the CFA Institute long-term vision for improving the investment community in Africa is similar to how they approached other developing markets. The focus is on the last two opportunities that I mentioned, ethics and education. The CFA Institute works with regulatory agencies, employers, universities to increase their awareness of the CFA suite of offerings. Initiatives to improve the quality and integrity of the investment market infrastructure. Improving the investment industry can have an immediate positive impact on Africa's economies by unlocking the vast potential of human capital in the region. Membership and candidate growth in African CFA societies has surged in recent years, and I think really the model the model, and Samia will attest to this, the real model for growth is here in East Africa. The number of charter holders has grown from less than 40 a few years ago to over 130 today. Last year, the growth alone was 29%, which is the highest in the whole EMEA region. And quite remarkably, there are almost 1,000 CFA program candidates. So that is just tremendous progress, and I commend you all on the efforts to have made that happen. I just think the future is bright. The roadmap to prosperity is clear. I'm very much convinced that the current generation of young, educated investment professionals in Africa will make a difference. And I'm very excited to be here. Thank you, and thank you for your time. I look forward to talking. If anybody wants to talk to me, I'll be here throughout the day. I'd be happy to talk to any of you. So thank you very, very much.
Thank you very much, George. We appreciate that very much. That's such a good closer because it's a good segue for me to jump into this. 4 CFA charter holders are what we're looking for today. We're going to...
It's been around for a long time, but it's just the innovation of cryptography that's turned into blockchain. And then when you put that together, each block contains a hash, as he was talking about, pointers, and a timestamp that says this is what happened, this is what time, and the transaction data, which is transparent, and then all put together, which makes it very resistant to modification. When someone was talking about transparency and being able to change data and being able to try and, transfer data from what it's supposed to be something else, it's a little bit more difficult using blockchain technology. But also it makes data easy to find and it makes it easy to store, and also there's ease of transaction and quicker movement of, when you talk about monetary systems, payment, remittances, and things like that. So that is sort of really what blockchain is technology. If you look at the evolution of technology in the world, we have the internet, and we sort of missed out of that in Africa because it was brought by other people. But then we have the mobile phone, and we sort of missed out on that as well, a little bit. And then there's blockchain. And we're still missing out on it because we're still contemplating, can we do this or not? Well, it's happening anyway. So either you like it or not, it's going to happen. And if you want to join it, you will. If you don't, you'll miss out anyway. But the beautiful thing about it is, George talked about education, which is a very important part, because I think one of the problems that, Jack Ma's always talking about this all the time, every time we're in a conference with him. You need to rethink how you do education. We need to rethink how we do education. When Patricia talked about robotics, again, if we don't rethink how we do education, we will never catch up with the rest of the world. And this is part of what blockchain is. If you move on, question for you. How many people have heard about all the cryptocurrency account? Or have bought cryptocurrency? Or have bought Bitcoin? Raise your hand. How many people have a wallet? 1, 2, 3. Nobody else. 4. And you guys are financial experts. Nobody's bought Bitcoin. Nobody's traded cryptocurrency. Nobody at all. Okay. And another very important question. Anybody at all involved in any blockchain technology project in this room? Apart from George. Nobody. Okay. Okay, so when did it all start?
Did you ask about technology?
Yes.
Yeah, my hand.
Okay, I bought Bitcoin in 2010. It was about $36 then. I bought it not because I was an expert, but just I like technology and I like anything that tells me that people are pushing the barrier. So I'm a risk taker, so I'll take the risk. Because at the end of the day, it's one or the other, So either you're risk prone or risk adverse. I'm very risk prone, so I'll always take a risk to make $1 or $2, really, if it makes sense. And technology, the first technology risk I took was buying into Google years and years ago, when people said that Google would never survive and the shares wouldn't work. So, and from that, I kind of developed an appetite to always taking risks in technology. When you talk about what is blockchain, where it all started, again, Satoshi Nakamoto, we really don't know who he is. If it's a person or if it's not. Because I've never seen him. And nobody really knows where he resides. But we all agree that he's the one who said, maybe I am Satoshi Nakamoto. I use it as a pseudonym, really John Kamara. But At the end of the day, the idea of blockchain is that it no reliance, is a digital signature, and it works on a peer-to-peer network. And it works in proof of things, proof of work, proof of service, and proof of integration. And it's also public. You know, it's public transactional history. So basically it means that I can access information and know that if I bought land last week, like in Nigeria, you know, you'd go and buy land and then 2 years later somebody would say, that was my land. Like, but no, I just paid $2 million for it. No, it's my land. This is my document. Because a document is not stored properly, because there's no real documentation, then you find that people always dispute over things like that. You go about medical records, you know, I try not to go for treatment in most places, and I moved back to Africa 3.5 years ago. I remember going to a hospital, and it was a government hospital, actually quite expensive, and they said, oh, we did all this stuff. Then I went back to the same government hospital about 2 months later. The same doctor had no information about what they had done to me 2 months ago. Now, imagine if I was really, really sick in a moment and he couldn't find data to actually understand what had happened to me before to continue to medicate. So he started from the beginning again. I'm like, dude, man, I'm leaving. I can't take these chances. And this is lives you're talking about. And that's why if you look at the mortality rate here, especially with, you know, women and kids, it's very high because a lot of it's because of data. It's not because we don't have good doctors or because we're actually not smart. We are. But it's also how we store this information and the instant access to this information. And then, obviously, again, you use around technology, the rules and incentive enforce real consensus mechanism. So basically what that means is it's telling you that everybody has to agree, or at least a higher percentage of people in a network have to agree for you to say, this is true. So it's not just one person, him saying, yes, this is the way it should be, or her saying, that's the way it should be. At least most of us here have to agree that, yes, this is real data, then we timestamp it, and we move on. So the next data is stored after the last data. And so even the likes of Oracle, IBM, all these companies are now going into blockchain to even for their ERP systems. I mean, if you look at Hyperledger, which we can talk about later with IBM, Oracle is working on a blockchain solution right now that they're going to bring out in 2019 because they feel it will better enhance their already existing ERP systems. So the big companies understand that blockchain as a technology has different facets, but it is here to stay and is here to help us to actually, you know, become better. And I think specifically for Africa, there's an important opportunity for us to take advantage of blockchain as a technology. Like I said, I'm not going to spend too much time. Cryptocurrency. Again, what is cryptocurrency? It's basically defined as a digital asset designed to work as a medium of exchange using cryptography to secure the transactions and to control the creation of additional units of currency. So currency, I think, is where people have a problem. When we use that word currency, people will get all like, oh, it's going to replace the shilling, it's going to replace the dollar, it's going to replace the pounds, it's going to replace the naira. Technically not. Because, you know, as we go through this, you will find that the fiat currency in the crypto world or the digital asset world, they sort of live, you know, hand in hand. I was in Malta for a week where there's a lot of stuff going on in cryptocurrencies and blockchain. And we had one of the companies who had about 30% of all the Bitcoins in the world, which is based in Malta. And I asked the guys, what do you do? So we changed it into real money. You get what I mean? So they moved the cryptocurrency into fiat currency at the end, right? So they can buy houses and stuff, and book big boats and, you know, all that cool stuff that you need when you make a lot of money from buying Bitcoin. But they were an asset finance company who had invested in Bitcoin a very long time ago. So cryptocurrency itself is a form of payment built in computer protocols that allows us to do maybe ease of payment or allows an ecosystem to create value by itself. And one of the big things that's caused a lot of problems, I think, people, was the advent of Bitcoin and not understanding of Bitcoin. People buying Bitcoin as security tokens rather than what it was built for as a utility value, which was the idea was, let us find another way to disrupt the market and use a utility token currency to say, I will accept this currency from you because this is the value, And that value is based around a proof of work done by somebody within an ecosystem that then allows me to say this is real money. So it's the same way when you go to the printer and say, please print us the Kenyan shilling, or we're giving you the stamp to say this Kenyan shilling that you printed is the right one. I mean, I could go print a Kenyan shillings, right? Find a printer that print me Kenyan shillings. But I don't have the authority to, because the authority doesn't come from me. It has to come from a legal entity, which is where the conversation gets a bit, a bit heated. And when you talk about cryptos, and one of the things you have to understand about cryptos is also, it was defined because when you said a maximum of 21 million bitcoins can be generated, or was generated. Why? Because it was to be used within an ecosystem where they were trying to get value for the people who were investing. And this is where we're going to come into ICOs, why all these things sort of generated. Again, technology behind Bitcoin is still based around blockchain. Transactional Bitcoin ledgers created around processing offering that allows you to use your peer-to-peer computers as nodes to then create that value. Proof of work, proof of scope, and proof of value. Those are the things in the digital ecosystem that translates to say what you have created can be accepted by me as a form of payment. If I remove the word currency and I change it to token, I went out the other day. I came to Nairobi. I went somewhere to dance for a bit. And I like my dancing. Quite a good dancer, actually. I really am. Seriously. Patricia, we'll have a little dance. I went dancing, and I got to this place, and they said, "Oh, give us 200 shillings, and we'll give you this round little thing, this token. Take it and go inside, and then with that token, you get 2 beers." What's that? What does that really mean? I mean, they took my money, but in that ecosystem, the only thing that was accepted was the token, because it created a value for that token. This is cryptocurrency, really, but it's just in a world where we can understand. And when I was explaining to the guy that you've just given me a crypto token, it's like, no, this is just our own token. It's for us alone here. Like, but that is the idea. You created a token in a very simple ecosystem, but you've taken my fiat currency. And when I was leaving, I said, well, I only have 1 beer. Is there a way I can collect? Oh, no. When I give you that token, that's it. There's no more money. But in a fiat world, I can take the remaining of those tokens and exchange it back and say, now I'm getting back my money. To simplify this, you have to understand that when we talk about blockchain technology, cryptocurrencies, they're not that different from what currently exists. The difference is there's no regulation. And when there's no regulation, people panic. And in the world, over the past 100 years, you can see it. Regulation always changes. And technology will always push the barrier for regulation. And people who are smart, financial people, I wish I was a financial expert in the beginning, will step in the middle, take advantage of that opportunity, and then also help the regulators create the regulation to manage what that's, So, and if you look at young people in Africa or in Europe, especially I was in Malta, and I was so impressed with how these guys have decided to turn this little island into the hub for everything blockchain, cryptocurrency, and token generation. And I asked myself, why are these people doing this? I mean, Malta is a European jurisdiction that is very well managed. And why are they doing this? Does it mean that they understand something that we don't? Or maybe they're actually thinking a bit more forward and taking the ability forward. And they brought a ton of experts when they have this Maltese legislation that's coming up last week when I was with the minister and the prime minister. And they explained that we understand that this is going to change. We understand that we can't change it. So let us find a way to figure it out and take initial advantage of it before everybody else gets to where we need to go. So then, mining evolution. I mean, I'm going to go to this a bit more, but you can get the presentation and then kind of get me through. 3 levels of blockchain. One is the storage of digital records. That's what blockchain really does for you. 2, existing digital assets. This is what they call a token or a currency. So when you take those digital assets and you say, I can exchange it for a service, that is a cryptocurrency or a token. And then when you say executing a smart contract, which means that when I give you that thing, if what you're giving me is not what it says it should be, that's what smart contract allows us to say is self-executing based on what we have both agreed. So I don't need a lawyer to tell me this. Now me and you can agree that this is how it's supposed to work. If this doesn't work, this smart contract will execute itself and I will get back my money because your product doesn't work for me. Again, it's allowing you, and this can be done in record time, in speed, which means cross-border trading, which means this whole thing that the 44 presidents did, it allows us to use smart contracts to aid intra-Africa trade, because the biggest issue in intra-Africa trade is trust. I've been to 29 African countries since I moved back, and the same issue is trust. When they hear I'm Nigerian, they're like, whoa, can't do business with you. You're a bit shady, aren't you? And then they say, I'm like, no, I'm actually Sierra Leonean because my son is Kamara. Oh, sorry about the war, man. You guys okay? No, but I actually grew up in London. Oh, you're British. I like you, man. You're smart. No, but but my parents actually live in the States. Wow, you're American. You must know a lot of good people. It's again trust, depending on where they view that I'm from. I was in Uganda and somebody was saying, we don't trust those Kenyans, man. I'm like, really? Have you ever met a Kenyan and say, no, but I just don't trust them. Those people, they think they're better than us. But it's the same thing here. Either you want to face it or not. I just moved. I've never lived in Africa up until 4 years ago when I moved back home. So learning all these things for me was learning from afresh. I was consuming information. I had no existing data. So there was no preconceived idea in my mind. I'm just accepting information and processing it to understand what am I doing here. And if you then move on, this is where I really want to talk about really quickly. ICOs. Now, and this is the connection between cryptocurrency tokens and blockchain. ICOs, if you get Ethereum, Bitcoin, was a way for companies to figure out that you guys who sit in this table, my first startup, 1999 to 2000, I went to a VC in Switzerland, and they said, we're going to give you 50,000 euros, but we're going to take 61% of your business. And I was like, whoa, okay. I don't really have any money, just take it. Just give me the 50 grand. I really need to get this business off the ground. By the time I sold my first startup, I only had 3% in my business. 3%. And everybody else made money apart from me. I'm still paying till today. And so I kind of thought about that. Then my second startup, okay, let me find my own seed investment from friends and family. Let me find other things. Then I'd go to a VC and they said, well, we can't give you $1 million. Why should we give you $1 million as a startup? What have you done? I'm like, okay, you know what? I got to fund this thing by myself. And when ICOs started coming, especially in Asia and in the US, and Switzerland started accepting a lot of these ICOs, and the idea was that disruption in the way startups actually raised money. Instead of me saying to you, hey, you are an investor, I'm going to give you 51% of my company because this is what I want to do. No, I'm going to generate a token off the blockchain because the product that I'm doing is going to be on the blockchain and it's going to be transparent. This is my project. But if you want to invest in it, here's the token. Hold on to it. Okay? But doesn't mean you have equity in my business. But hold on to this token. If my business, and this is how much I need, if you believe enough in it, go ahead and give me that money. Now, if my business becomes valuable, this token that I'm giving you, one, you can either use it as a service within my business to buy stuff, or for people who accept what I'm selling them. So somebody now comes back, exactly what I told you about the guy. So when I now go to the nightclub and he gives me that token, so the same token I have bought from somebody who has a business idea to say, okay, well, since it's on the blockchain, I believe this is transparent. So I'll buy this token, and the day you want to use it as a service, I will sell it to everybody else who wants to buy service of you. That's all it really is. But then, as a startup, I am now in control. For the first time, startup businesses are now in control, not you guys anymore, sorry. They're in control. We're in control technology-wise. So I can now say, this is how I would like to run my business. So my token is either a security utility or an equity token. But equity tokens are not used much these days because then it comes under legislation. And then the guy says to you, well, at the end of the day, well, I'm going to buy all these tokens and then I'm going to use it when your business gets value. That is all we're talking about here. So if you look at the token, so people call it TGE, token generation events, or tokenizations, and a lot of people started moving away from calling them cryptocurrencies in startups to actually saying token generation events. I mean, here we're still saying, ICOs around cryptocurrencies. And there's so many of these tokens. Now, these tokens as well, when the person then says, well, how else can I get value of this token? Some people created crypto exchanges, just the same way you have a regular exchange. So in this crypto exchange, you can now list your token. So remember, it's a startup that's been listed, which is unheard of in your regular world, right? Because you have to be a big company to do an IPO. But here, an ICO means I can be a listed company on this crypto exchange. My token has value because my business is beginning to have value. The more value my business has, the more value my token has, because more people want to buy those tokens to pay for the service. I have made it a rule. In my business, the only thing I will accept is those tokens. So if my business gets value and people want to pay me, then they have to go buy the token somewhere. That's why I list the token on the exchange. So for you who first invested in me, you can now get 10, 20, 100 times the value without waiting for 5 years to exit. It's an exit strategy. So you have all these exchanges, Coinbase, Binance, in 2 years have gone from $0 to $3 billion businesses. And I think that's what scares people in the traditional world. Because we have all these ICOs, companies who have gone from $0 to $150 million in a year to $3 billion. They're like, how is this possible? But it's because of this ecosystem where ease of movement of transaction value is becoming the norm. So token generation events are part of what is going to change the face of the way startups, technology people do business. If you look at this, for example, this is very interesting information. From January 2016 to July, ICOs raised over $3 billion. This is like, technically that is seed funding. In the traditional world, it's absolutely impossible. And I'm going to show you the top 10 ICOs so you see how much they raised as seed funding while controlling their own ecosystem. And as a tech person, it makes me happy because now startups can actually be